Gold is rewriting the rules of the market. The yellow metal crossed $4,000 and announced for the first time this week. Friday's market crash in stocks to cryptos and commodities puts the spotlight back on gold. The continued shift away from the dollar is boosting the bets in favor of the precious metal. Take a look at this next report for more details.
On Friday, $1.65 trillion were wiped. Off Wall Street, stocks and crypto liquidations total about $20 billion, shaving around $300 billion from the digital assets market. While stocks to gold to commodities tanked, gold held above $4,000, and bets show another surge to come. Before Friday's slump, risk assets had also rallied significantly. But the bull run in gold far outpaced Bitcoin's 30% rise and the S&P 500's 15% gain before Friday's crash. For the week, gold closed 3% higher above $4,000. That marks a record high weekly close. In contrast, Bitcoin dropped over 5%, double the decline of the Nasdaq. Until Friday, investors saw an unusual phase where gold equities and cryptos climbed together. Traditionally a hedge against turmoil, gold's parallel surge with risk assets reflected a major shift investor behavior even before Friday's crash. Those bets were driven by U.S. rate cuts and a weaker dollar. The U.S. currency has fallen 10% in 2025 and is on course for the worst year since the collapse of the Bretton Woods system in 1973. Multiple factors are fueling gold's record run. Donald Trump's spending plans, tariffs, and attacks on the Federal Reserve have raised concerns about inflation and central bank independence. Inflation across the G7 economies has climbed this year, while investors question the dollar's dominance as the world's reserve currency. Central banks have been major buyers, now holding a quarter of their reserves in bullion. Analysts say gold has become a debasement hedge, a store of value amid political strain, fiscal excess, and uncertainty over policy direction. Gold now exceeds 1/5 of world reserves. What's striking this time is gold's rise alongside an AI-driven stock boom before Friday. As markets soar, portfolio managers are adding gold to balance risk, while retail investors pour money into gold ETFs, reinforcing demand. Experts warn of a market bubble, but see gold also serving as a hedge against potential AI bubble burst. Since August, gold is up to 20% as inflation fears, political risks, and dollar doubts converge. The message from markets is clear. In a world of shifting power in policy, investors are returning to gold as ultimate safety net. Trump's policy rhetoric and the uncertainty, as seen on Friday, has added to the yellow metal's appeal. With the U.S.-China trade war back in the spotlight, bets for gold to surge to $5,000 by the end of this year and surge further to $6,000 next year looks more likely. Business Bureau Report, WION World is One.